Have you ever wondered if there's a financial rulebook that works no matter what? We're talking about principles so solid they've survived every single market crash, every war, and every economic disaster in recorded history, from the fall of Rome to the 2008 financial crisis. Certain truths about money have remained constant. Today, we're diving into 5 of these timeless financial principles. Sticking to these could be the difference between sinking and swimming when the next storm hits. And trust me, another storm is always on the horizon. First up, the golden rule you've heard a million times but probably underestimate: live below your means. This isn't about being cheap, it's about creating a buffer. Every financial collapse in history has one thing in common: it wipes out people who are stretched too thin. When you spend less than you earn, you're not just saving money. You're buying yourself freedom and security. It means a job loss isn't a catastrophe, and a market dip isn't a personal financial crisis. Look at the Great Depression. The people who had savings, who weren't living paycheck to paycheck, had options. They could buy assets for pennies on the dollar or simply wait out the storm without losing everything. This principle is your first and most powerful line of defense. It's not about depriving yourself, it's about empowering yourself for the future. So, take a hard look at your budget. Where can you create more space between what you earn and what you spend? That space is where financial resilience is built. The second principle is one that the wealthiest families have used for centuries: diversify your assets. You've heard don't put all your eggs in one basket. This is that, but on a grander scale. History is littered with examples of fortunes lost because they were tied to a single asset class. Think about landowners in revolutionary France or tech millionaires after the dot-com bubble burst. True wealth isn't just about stocks or real estate. It's about a strategic mix. This could include stocks, bonds, real estate, precious metals like gold, and even commodities. Why? Because when one asset class is tanking, another might be soaring or at least holding steady. During the high inflation of the 1970s, stocks performed poorly, but gold prices went through the roof. Diversification acts as a shock absorber for your portfolio. It smooths out the terrifying ups and downs and protects you from being completely wiped out by a single event. It's not about avoiding all risk, but about managing it intelligently so that no single failure can take you down. Now for our third timeless principle: always prioritize paying off high-interest debt. Debt is like an anchor. In calm seas, you might not notice its weight, but when a storm hits, it will drag you straight to the bottom. Every major economic downturn crushes those who are heavily leveraged. High-interest debt, like credit card balances or payday loans, is a financial emergency in itself. The interest you pay on this debt is a guaranteed negative return on your money, often at rates of 20% or more. Think about it: where else can you get a guaranteed 20% return? By paying off that debt. Throughout history, from the tulip mania in the 1600s to the housing bubble in 2008, excessive debt was the fuel for the fire. When the bubble popped, those with massive loans were the first to go bankrupt. By aggressively paying down your high-interest debts, you are freeing up your most powerful wealth-building tool, your income. It's a move that pays dividends in both financial stability and peace of mind, no matter what the economy is doing. Let's move on to the fourth principle, and it's a big one: invest for the long term and ignore the noise. The daily news cycle is designed to make you panic. Market plunges, recession fears loom. This noise pressures people into making emotional, short-sighted decisions, like selling everything at the bottom of a crash. But history shows us something remarkable. Despite countless wars, pandemics, and depressions, the overall trajectory of the market has been upwards. The key is time. People who invested in the stock market right before the crash of 1929 and held on were eventually made whole, and then some. Those who panicked and sold locked in their losses forever. Long-term investing is about having faith in human progress and innovation. It's about buying quality assets and having the patience to let them grow over decades, not days. This means tuning out the daily chatter and focusing on your long-term goals. Your future self will thank you for not panic selling during a temporary downturn. Finally, our fifth and perhaps most crucial principle: always be learning and adapting. The world changes. The specific tools, technologies, and even currencies we use for commerce evolve. What doesn't change is the need to understand the game. The Roman merchant who didn't adapt to new trade routes went out of business. The factory worker who refused to learn new skills in the Industrial Revolution was left behind. Today, we have cryptocurrency, AI, and a globalized economy that is more complex than ever. You don't need to be an expert in everything, but you must remain curious and willing to learn. Read books, listen to podcasts, follow trusted financial experts, understand the basics of how the economy works, what inflation is, and how different assets behave. This knowledge is your ultimate asset. It allows you to recognize new opportunities, avoid scams, and adjust your strategy as the world changes. The financial principles may be timeless, but their application requires constant learning. Your financial education is an investment that no market crash can ever take away from you. So there you have it. 5 principles that have stood the test of time. Live below your means. Diversify your assets. Eliminate high-interest debt. Invest for the long haul. And never stop learning. These aren't get-rich-quick schemes. They are the bedrock of lasting wealth and security. By building your financial house on this solid foundation, you can be confident that you're prepared to weather any storm the future might throw at you. Thanks for watching today. If you found this valuable, hit that like button and subscribe for more content that helps you build a stronger financial future. Let me know in the comments which of these principles you're focusing on right now. See you in the next video.